Go. All right. So, welcome everybody. So another session of the Bookmap Academy. We'll go through your trades, give feedback. It's a coaching and mentoring program. If you're interested, let me show you where you can find out more information about it. It is from bookmap.com here. Go to the More button here, and then under Community, go to Bookmap Academy here. And this is the plan, right? It's a fair deal here. You guys will journal, you'll create content, you'll mark up your charts so that we can take a look at it. You will trade from the chart. So we can give good feedback, not just on your trade criteria and your checklist, but also your trade management, which is really key. Being able to see those trades in there. And then for that, you'll get feedback, you'll get the community, and then you'll work towards building up a threshold and a quota. If you can reach that of quantitative and qualitative, you can get Bookmap for free. You double it, you can get the MBO bundle for free as well. And then you can become a coach later and get data for free, and then become a streamer even later on. So this is kind of a pathway here for you guys if you're interested in becoming more professional trader. And let's see here. I got to go through the disclosure and then a couple things, and then we'll jump in with David and Rob. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. We still have this going on for the summer. If you trade from the Bookmap chart and show that, which like I said earlier, we want, we can give you much better feedback. You will get 2 times the towards your quota, right? So continue on with that. It also works for the blue jacket. And then please verify your subscription. You can the QR code is here, so you can take a screenshot with your phone. This is required now. You will need to verify your Discord user ID with your bookmap.com subscribed email. This will tighten up our community quite a bit. It'll make it much better. There won't be a lot of disruptions or people in there that shouldn't be in there lurking about and just wasting time. So anyway, that's the goal here. And that said, now let's jump in and we'll go over David first with Rob. Is Rob in here?
I think he is, yeah. I can see him now.
All right.
So as a heads up, I've got Rob, I've got Sharp Blue, and I've got Shurega. So we're going to start with Rob, as you rightly say there. Bruce.
Okay. All right. So yeah, take it away, David.
Yeah, well, good afternoon, good evening, traders. Great to see everyone again, new guests and old guests and so forth. I've got a couple of trades here to go through with Rob on NASDAQ, on NQ. His charts are on PST as a reminder and so forth. We've got a news trade and we've got a beloved opening range bar, ORB trade, that really tickled me when I saw that. So that's fantastic. Rob, do you want to talk us through the news trade that you took, please?
Yeah, sure. Not a problem. What day was this, David?
Let's have a little look. You're going to catch me out there. There's no date on that chart, is there?
Okay.
I think it was Monday as a guess from when I was writing this up today.
All right. Yeah, so this is a news trade I've been working on for some time. Basically what it is you have some kind of news event that's going to come out.
Yeah.
And it's a momentum based approach, or a based kind of trade, meaning I'm not trying to anticipate what the news event is going to push the market. I just try to ride the trend as it unfolds. So in this case, I had a prior structure. Generally, it's kind of what I'm looking for, is so some kind of structure to play off of, to put like an order above or below. Mm-hmm. So in this case, you could see I had there was a support zone of overnight highs. I don't know exactly what happened before. I'm assuming that price came up above overnight highs, consolidated, made another run, and then from 657 to 7 was consolidating. So I went ahead, and my bias was to the long side. So the long entry was a little bit heavier because you could see you had some target liquidity up around 19,900.
Yeah.
And so I placed a couple buy stop orders, I believe is what you call them, right above 19,885, 889, around there.
Perfect.
And then, yep. And so put a couple buy orders there. I put a sell order right underneath overnight lows. I'm sorry, overnight highs, down at 19,860. Or a buy or stop sell order, whatever it is. Basically, I was kind of going both ways, right? So if we broke above 19,883 on high volume because of the event, I was going to ride it into liquidity. Now, if we broke lower, then I was going to try to ride it low on to the downside. But I wanted to give myself a little bit of wiggle room, because with these kinds of trades, the idea is that you're placing your entry far away enough that you're going to ride momentum and not get stopped out.
Yeah.
So it's at a spot where the market reaches that spot, it's going to just bang and explode. I don't want to put it too close, because then otherwise volatility might snap me out of that trade.
Agreed.
And so, yeah, it's been working pretty well. I got a pretty high win rate with these. Today's was pretty good. Real estate event is kind of the same setup exactly. So yeah, that's in a nutshell how I trade these.
Yeah, no, great charting, great trading. Thank you as always. Where did you get the sort of lead to start trading the news? Then I'll sort of give you my story on how I like trading the news, Rob.
How did I do it? I think I'm pretty sure it was during replay mode.
Okay.
I was replaying a day, and I just kind of was looking at it after the fact. I was like, maybe this would work. And so I just kind of attempted it a couple of times. I tried it, I looked for a couple of days. I had news events, tried the same setup, saw that it worked, and then been kind of refining it ever since.
Brilliant.
But now I'm trying to scale up with them. Yeah.
No, well done. So on my sort of story in this, and I will lean to Bruce, because Bruce will rightly talk about slippage and not getting filled and so forth. But as some of you know, or probably all of you know, have heard me say before, when I started this running my own book back in 2016, I was just trading Forex. And I was trading Forex because in my work life, I used to look after quite a large treasury team. So I understand all those phrases, Forex very, very well. And a lot of Forex traders just trade the news. And if you haven't thought of trading that, and I'm sure a lot of you have or haven't, it's not a bad thing to do. It's a bit like the Open, the time of day it's going to happen. So like you talk about today, Rob, there's news coming out. You can look at your economic calendar, whether that's on Forex Factory or investing.com or whatever you're looking at. You know what time the news is coming out. So you can do whatever you want for the rest of the day. Just come to the screen. It doesn't really matter. I know it's a broad statement, exactly what the market's done the night before, the morning, because you're just going to trade the volatility that the news print gives you. And that can be quite a satisfying way of trading. I do exactly like you do as well here, Rob, and I have done posts on that, not necessarily in Bookmap, where you're playing around with your long position potential and your short position potential, and you just fiddle around with them on chart until the news comes out. My advice on this, to really get a feel of it, sadly, it's very hard to do in sim, because I think in sim, Bruce, it will always get filled. And what I'm doing, and how do you've got your stops running on this as well, Rob, sorry. So I say, preaching here, making sure that you've got your auto stops that are kicking in, as you rightly showed. You've got your profit target in there, and it can be a very, very nice way to get the money. The other thing that you've got on here, and I think it's a bit less so these days than other X years ago, is that fade, that the price will scoot up. Bruce, you remember I used to call these like champagne moments when we doing posting years ago, like a cork flying out of a champagne bottle. Up it goes. You take your money, and then you're looking, or you can be looking, for the price action to then actually ride it back the other way, take the other direction. But I say my gut feel these days is less so, because often it shoots up, it pulls back a little bit, and then it just continues going on. But David's point is that these trades are they're worth exploring as a scalper. That's for sure. And you're saying you're picking up clues from, say, some of the liquidity on the chart. It can be, earlier highs, prior week highs, or something, and so forth. It can be other technical levels where you've got a feel of where the price might go to and get your exits in automatically on that. What I did post today in the Academy room, I'm sure some of you saw it, and Bruce may cover it because Moby was looking at it earlier on. Often I've found, and I'm not alone on that, you will see the price move ahead of when the news data is released. And you can see that on this chart here. You can see 7 o'clock is on the chart is the 10 o'clock release, isn't it? And you can see volumes already starting to build up ahead of that data. Now, sure, you can say that's just people taking a punt. It can be. But sadly, as we saw with the Bureau of Labor Statistics, was it earlier this week, in terms of like the banks know, and as Scott says, it's only us dumbass retailers don't really know what's going on. So I look for those clues as well, Rob, looking at that volume, see what's happening in the minutes up to the release. And that can give me confidence to either tighten in my buy stop entry or sell stop entry, or sometimes, I might actually cancel the whole lot. I sometimes do that thing. Actually, no, I'm not convinced on this. Bruce, what do you think before we go to Stan, please, sir? You probably think, you dangerous boys. You shouldn't be playing with that. That's
No, it's funny. I used to it's a very similar history to you. I was trained by a bank trader, forex trader, and this is what he did. His technical analysis, I'll show you. It was this. Just that.
It's that
trend line. No, he would put on two. He would put on two trend lines. One like this, one like that. It breaks one way, you go that way. That's it. And then he's waiting for the insight from the news. He knows that people are reacting to it. He looks at the number. He rides it. That's it.
That's it.
And he's, he was a news junkie. I mean, he knew all about it. He knew all about the Fed speakers, etc. He knew them like they were like, athletes or something. I'm not kidding. And like he would know what they said before. He would know the statements, everything. And then just, get a pure direction out of it. So I think it's a great trade. I think just a step back, Rob, I think what it's like your other trade that you did is like, I really like this, your mindset here of like, well, that's interesting. You're playing in replay mode and you're like, well, that's interesting. Look at that. I bet you I can make some money out of that. And you start to kind of like figure something out for yourself. You practice it. And all of a sudden you've got a strategy. And this is exactly what he would do as well. Like this bank trader, he'd straddle the market. He would say like, I'd say, well, what don't you want to be in like here? Like he goes, no, I'm waiting for the event. I want to be in here. And when it moves, that's where I want to be in. And I want as much liquidity as I can get right here. And then he'd put one down below here as well. Anyway, that said, just kind of in a nutshell, there's lots of things to kind of look at and consider, I think, here with these news trades. They, like you were saying, David, they kind of lean a direction. You're above the overnight high here on volume into high liquidity. It is likely, even with if the news is negative for price direction going up, it doesn't matter. We'll probably get this, then it will probably hit high liquidity and come back down and go below the high volume here and really take off to the downside. So there's all sorts of ways of looking at like, okay, what do I anticipate in terms of price movement? Where's the liquidity? And also like, what if it's a bad number? Let's suppose it was a good number here. So, you nailed it. So what if it was a bad number? Well, you're probably still pretty good here to go to the upside and see, like, maybe it tags this or comes close to it, and then it fades, because a lot of people are already kind of positioned, and I don't know, there's a lot of details here to take further if you like. That's all I have.
Yeah, no,
Stan.
no, good stuff. I quickly, sorry, sorry, Stan. I popped in the chat. So a good forex book covering some of these sort of news trades is by a trader called Kathy Lean. She could be worth a look at. Stan, my bad.
No worries. Yeah, I find very great, like the way that you are looking at it in replay mode. And just as David said, I think the execution might be a bit different. Like I'm wondering how you would manage it if, for example, in this case, you got a sweep and you got execute completely at the top of it. How you would manage, for example, your stop, or like yeah, just think like it might be difficult during news. Like we never know like how it will goes.
Yeah. You mean like how would I manage if I had a runner that was a little bit higher? I would manage like the aftermath of the event.
Yeah, sounds it.
I don't know. Like I just like this for a scalp, and I don't care what happens afterwards. Because this trade right here, what I love about it, it's an easy trade. I don't have to.
Yeah.
I don't have to give a damn about any of that stuff. Like how am I going to manage it afterwards with my trailing stop? Like, who cares? I'm going to get in there and I'm going to try to take 20, 30 points. I mean, this trade lasts like a second, like a second and a half, and then and then trade the aftermath. So like Bruce pointed out, like the short that I took right there, I don't remember what happened afterwards, but a better position would have been right at 9882. So that would kind of be what I would trade afterwards. Would be like, okay, I got my scalp, I got some cash in the bank. Now let's see what happens afterwards. So if that high volume node that kicked off that move gets obliterated and gets sold into, then that might be an interesting position to take a short at and kind of go from there. So really this trade right here is just to get quick pop, quick money, easy trade, and that's it. Because the aftermath is going to be super volatile, so I wouldn't know where to put. Where do you put your stop?
Yeah.
I could put it below the previous pivot low, which would be like 870, but it feels kind of arbitrary. So I really just want that quick pop, especially when you have a large sit in order like at 1990 or 19900. I mean, that's just like begging to be hit. So yeah. I mean, it's a good question, Stan. I don't really have long story short, I don't have a good answer for it because I just want to take the scalp, get some money, and eventually, man, if I feel like with these kinds of days, like the same thing for today, like I got a good trade off that news event, and then I gave some cash back because afterwards it was just whippy and I get whipped out, and so I was like, maybe on these news days I just scale up, get a nice chunk of cash, and call it a day.
Perfect.
Yeah, but I don't know.
I'm going to echo really what Bruce was saying, because if I go back to me in 2016, I used to trade in a room with Ryan Littlestone, who owns and runs Forex Flow, those guys that trade Forex, and Mike Patterson, who's a UBS trader, retired now, and used to run Forex Live. And that's what these guys would do. As you say, Bruce, this was their play, and they'd make notes about how the market reacted when it perhaps did matter to deltas and pluses on a release compared to expectations. But that's all they did all day. They just waited. They came to the screen for this trade. That's it. And the rest of the day they're doing something else.
Yeah, because I mean it makes a lot of sense because as Bruce was pointing out, you could have got in earlier, like around 6:55, but again, like
could have had your teeth knocked out then.
Yeah, I mean, you could have put it in, but put yourself a wide stop. But it's really tricky because I mean, it's really tough because you could have got it on that break of liquidity at 6:57. You could have got, okay, well, I'm going to see if I can get in long there, but then you would have had to weather around 7-8 points of a pullback. So yeah, these days I'm just kind of really experimenting with the easy trade, the momentum trade, just getting in where I think the market is just going to just flush in a particular direction, get some profits.
Yeah. My only other tip comes to mind here is for NFP. I rarely trade the indices on NFP or FMOC. I'll lean into trade gold because I find less slippage on gold compared to when Powell's speaking or something comes out on indices. It's just, but I'm being a bit pedantic there, really, Rob.
Oh, that's interesting. I have been meaning to look at other futures because right now I'm just really sticking to the NQ, and I was noticing today, I was like, oh man, the Russell's really moving a lot easier.
It was today. Yeah,
so it's like I really should start looking at the Russell and a couple other futures, and because again, like I'm looking for that easy trade. So if the NQ is choppy, why not look for the thing that's moving easier?
Yeah, and if you look at some of those breakfast commodities, I think we've touched on those before, though it's corn or soy or so forth. When those get range, and I know Bruce, you echo that as well. When those things start to move in a direction, they really are an oil tanker. Now, sure, I know someone will bring up a chart and go, "That's not an oil tanker, David. That's just a complete mess." But typically, if you go back or you start adding a tab for those and looking at them, they are, once they set off, they set off.
That's cool. I do have a goal to trade orange juice. I find out that orange juice has futures, and I was like, oh, that'd be kind of cool. But
you're after Scott's heart here, aren't you? With sort of one of those classic films he talks about all the time, Trading Places, isn't it, Bruce?
Yeah, frozen concentrated orange juice.
Yeah, so random. So I was like, that's really cool. That's like old school traders, So yeah, thanks, Dan. Thanks, appreciate it.
Lean hogs, I see someone point. Yeah, hogs are good. Cattle's quite good as well. I like cattle, GF. It doesn't. Then he opens about 2 hours a day. Your next trade, should we use that as a segue there, Rob? Because we're probably putting people to sleep here. So your ORB.
Oh, I'm sorry. There is something I want to mention here. Just one thing, like a caveat. This can be some really dangerous stuff. You can get annihilated really quickly. So make sure that you, if you're interested in this, like back tests, look at these things, start to understand how you're going to manage them, because it very could easily have, just kicked in above this range in here and then come right back down. It happens all the time. How are you going to manage it? So just be careful. I would also study your points moves after news events like this. I don't know which event this is. It looks like to me like this is one number, like CPI or maybe it's retail sales or whatever it is. Those are the easiest to trade because it
was the jobs number. Sorry to interrupt. Now I remember, it was a jobs number that came out that was revised like a week ago or something.
Okay, and again, if it's one number, it's easy. If you try to play this with non-farm, you try to play this with FOMC, you're really playing with a complex event. So just be aware. It's like FOMC is it could be like 4 events that you're trading. One is the number. The other is the interest rate number. The other is we have the press
statement.
The statement. You got to read this. You have to read the statement. You have to speed read it. You have to know all the other statements. Then there might be the projections, right? You have to read those. You have to understand what it is you were looking for and how traders might react to them. Then later there's the press conference, and the market might not be care about any of those first 3. They're looking for a press conference, and they're looking for just 1 or 2 words from the chairman, and that's all they're looking for. So you have to really be careful with those. This is like a single number here. Looks like it was maybe weekly. Is it weekly jobs? Or I don't know. It's 10 a.m. East Coast time here. So anyway, that start with those, and also get an understanding of the price movement for those. What is an average price movement? You have to go back in history and take a look at them, and that'll give you some pretty good insight of how you want to manage your stops, like you did, Rob. Like you just used well, look at this. This is a good target, right? Look at this momentum. Well, I think it's going to go here. And you can pretty easily put that together. you're going to get slipped. There's a lot of danger. It's a different way of looking at this in trading, but you could be done in 10 seconds, basically, and you're done for the day, or maybe the week, or maybe even the month. So,
Yeah.
but
For what
there's
it's worth, there's a couple caveats with this. I don't know if I mentioned them, but like I basically have 3 requirements to take this setup. Because one is there has to be structure to play off of. Because where I put my entry, it's kind of a flip on that saying. You kind of like with a stop loss, you know, like, where am I wrong on this trade? The way where I determine to place my entries, like where would I be right? Like where is the spot in this trade where it's like if you're not in, you're too late. And so that's why I moved it. If you could see the entry, I actually kept bumping it up and up because I wanted it to be far away enough that if I get in, it's because this momentum has just pushed price into my entry and through it. So that's kind of one caveat with it. The second is structure. There needs to be some kind of structure nearby. So it could be like in this case, you have a kind of almost like a break and retest of overnight highs. You have this prior pivot, like kind of like a continuation pattern. There has to be something that you can play off of. Like if we were just like stuck in the middle of a range, I wouldn't be interested.
Yeah.
Because it could just be too volatile. It could be too whippy. I want something where it's like, hey, if we hit here, man, there's a good chance this is just going to blast through and hit, 19.9 or whatever. I don't want a lot of resistance in the way. So if we're in the middle of a range, you got a lot of buyers above you, you got a lot of sellers below you. Don't care. Like imagine like if this was coming out like around 19,865, it would have been probably a different trade. And then finally, what was the last piece? I don't trade FOMC or any of those things. It's just this is a morning trade. I don't trade. I actually avoid trading on those days because I just find the market too whippy and volatile. So
great.
Just in case anyone's interested in taking the setup.
Good points.
Just one more point. It's up to you. What you had just mentioned there makes a big difference about like I will not trade this unless I see some sort of structure and I'm going in the direction of that structure. Or like you see tremendous volume going against it that's going to stop everybody out. That's huge. Otherwise, if this was just choppy the whole way, you don't have overnight here. This is where you can get really hurt because it'll go up, it'll go down, it'll come back up, and then maybe it continues. I mean, like it does all sorts of things. But this is pretty, like you've got a great setup here, and I think that's you basically I would encourage you maybe to put a checklist together even for the news trade.
Got it. Yeah, definitely will do.
Good points.
Stan and David, any more?
No, good. No, good tips, but well worth everyone having a look at this because it could be a useful, quick, cheeky scalping trade in your tool bag for the day. That's for sure.
Yeah, and no, for me that's perfect. Just about the execution in life might be a bit different. Have to try to, but might be a bit dangerous. But still, if you read it, if you know what you're looking for, as Bruce mentioned, maybe build a checklist.
Sweet. Thanks, guys.
No, thank you. Rob, since we've already spent half an hour on, or at least 25 minutes on one, but it was well worth it because we haven't gone over news trades in the past with order flow. And it's this is what really drives the market typically. I mean, it's orders that drive the market. We know that. When are the orders like the biggest? It's usually typically around these kind of fundamental events. I mean, the bank trader that taught me, he said, I guarantee you, if you look at any chart, any like higher time frame chart, why a move started, it was because of fundamentals. And I think he's right. I mean, technicals, who cares? It'll slosh around in here and there and whatever, but like the bigger direction is because of the fundamentals. Anyway, let's jump into next one here, Rob. We haven't gone over you for a while, so we'll continue on with this one.
Sweet.
Perfect. So talk us through this is your ORB trade.
Yeah.
On Nasdaq. I like the numbering, easy to read. That's the point for some of the charts we've got today. So it's nice. We know which one to read first. So over to you, sir. Or continue, please.
Sure. So, I recently, like the past month or so, maybe 2 months, I was noticing that I was taking some really early trades, like really within the first 10 minutes, and I realized that I was taking a lot of ORBs without realizing it. When I used to trade options, those were kind of like my bread and butter, but they were always super mixed in terms of success. And so I've recently started to transition ORB setups to Bookmap, and I mean, pretty classic ORB setup. You look for some kind of time frame.
Yeah.
I usually trade the 1 to 15, the 1 to 5 to 15, or the 30-minute time frames.
Okay.
I wait for that time frame to establish some kind of range, and then I look for some kind of higher liquid. In this case, since the liquidity is higher, so I'm looking for a bullish movement. If the liquidity was lower, I'd be looking for a bearish movement. And then I wait for high volume to kind of get into the top of that range or the extreme of that range, and then to push price into that next level of liquidity. So in this case, you can see it's a 1 minute ORB. After the 1 minute established itself, you started to see price go back up to the top of the range, which was around 19,925. Got in, gave myself a little bit of breathing room for the stop, and then put my target right below that liquidity at 937.50.
Brilliant.
And I mean, pretty simple.
But effective.
Nothing, not a whole lot to them really. And then once the trade gets moving in that direction, I usually bump my stop up to break even or close to it, because ideally the trade should get going. I don't really, if it starts to come back in or fade back into the range, I'm out. I'm not interested in it anymore. Because again, this is like kind of, again, like another momentum based trade. So if the momentum doesn't take off and starts to roll back on you, then it's a different trade. So it's not really worth taking the full stop. I'd rather stop out for break even or take a little bit of a haircut and then get back in if the setup reappears. And again, the same kind of concept as the other trade we just covered. Is like structure is a really important thing. So, if the 15-minute is coming up and there's not really an interesting structure to play, then I'll avoid I'll avoid the ORB. So in this case, you could see that we had a prior, like that top of that range had been in there for a little bit. Price was kind of ping-ponging back and forth, consolidating, lots of buying volume within there. Just this trade just looked really good. And then you have that high target. But since it's the 1 minute, I go really light on the 1 minutes because I don't have a lot of data to process really to give me some confluence. So I'm usually going to only go a one contract or two, if that, and be really conservative with my targets. In this case, I only had one contract, so this wasn't really the best trade in terms of 2R, or I mean, in terms of R, it was like 1R, if even that. But real quick scalp.
Oh, very good. Do you do much scaling in? My usual question.
Only if a setup really warrants itself. Like I wouldn't scale into a 1 minute ORB, but let's say like this is like the 15 or something, or the 30. And you get like a really nice move and then you get a pullback, then I might be looking for a continuation setup on that and scale in. But I guess it's kind of almost a different setup at that point. It'd be more like a continuation than an ORB. But yeah, I mean, that's what I think you would look for here, right? You get the move up, see if you get the pullback, and then you can scale in on a continuation to, if there's any higher liquidity.
Yeah. No, it's good. I mean, I've talked about the ORB a lot, and we were talking before the call with Bruce about that, some sort of Webbian and how we approach aggressive trade and so forth. I've just popped in the chat. That's my tick chart for today. I stay on the 1 minute throughout the whole session, and a key part is also that opening print, where you pretty much got in here. It's that what was that opening print of that 19,926, let's say, and so forth, and it gives me a lot of confidence to trade aggressively using that. But you've got some great stuff on the chart, as you've highlighted at 3. You've got that volume picking up, or VPA, and a volume price analysis is kicking up, and so forth. It's the bubbles are the green's getting bigger as you get back into the opening range, and off you go. You've got the upper liquidity, as you rightly talk about, as potential targets and magnets, as Scott would say, and so forth. And the rest sort of speaks for itself, etc., etc. Stan, thoughts, support, please, sir.
Yeah. No, yeah, very great one. Yeah, you had your plan, you apply it. Yeah, not a lot to say. You had the other flow that were going with you in this case. Yeah, no, that's perfect. Money management too. Your stop was defined. You directly took it at break even. You took a front of liquidity. Yeah, that's great. Not a lot to
Thank
say.
you.
You have your plan and you do it. I think what might be interesting with the volume, it's maybe to have more of this bar. I don't know where the setting is, but I think it might be good to have more information about the volume into this big move. Not sure you will change something because you had your plan, you have your OBR or AB, and then as soon as it gets there, you enter. So, but I think maybe play with the relative volume at the bottom to have.
Yeah, how do I? You talking about the relative volume on the Nasdaq or whatever
So
I'm
it's not
trading?
about in studies. It's not about the add-on, but in studies configuration, and you might so like lower the aggregation, and so you will have more bar, and you might maybe have a better understanding with dots and what's happened in this move. It was like yeah, for example, if you slow down, use it a lot. Um, just the lower the aggregation about the bars to the relative volume on the bottom.
Oh, okay. So kind of see a little bit more nuanced about where
Yeah,
people are actually
exactly.
buying.
Yeah,
Gotcha, because it's pretty spaced out there.
but
Yeah.
yeah, and so yeah, I don't know if in this case, for example, but yeah, your plan was the OBR, but maybe you might maybe have a better entry by looking at yeah
Oh,
yeah,
that's a great suggestion. Thank you.
but still overall, yeah, no, that's great.
That's
Thanks.
good.
Yeah, I
Good trading
usually.
before we.
Oh, sorry, I was going to say just for ORBs, for what it's worth. The one thing, I mean, that is a good point because I kind of don't. I mean, I do pay attention to volume, but the thing that really gives me like the confluence is those targets of high liquidity.
Yeah.
So in this case, I was really looking for it because I saw those targets layered from 34 up to 45. And so I thought, man, like there's a lot of sellers, sitting up there. So that might be a good place for, whoever, market makers, the market, whatever, to drive it and can take that liquidity.
Yeah.
But I mean, that's a good point. I definitely could use a better insight into volume. So I'll mess around with that. Thanks, Dan.
The other thing to add here before we perhaps segue into Bruce is that you've got Confluence here, you've got the POC on there. Some days you can have VWAPs in the same sort of zone. You can have some spot gamma levels on other sort of levels, and it gives certainly me a lot of confidence to lean into to do a little bit more than a single entry because I feel where we're going to go. My Christmas tree in the chat, as Slowdown's rightly mentioning with my red and green Cindy, so to speak. I appreciate it's just sort of a snapshot of where we are. Price scooted up. It then came back down. While it's coming down, I'm thinking, okay, it's likely to get to, once it's gone through that mustard line, which is the opening print, it then came back up to kiss the upper ORB before then going down to bumper off the lower ORB. That is not just a random post. This seems to happen most days. I know quite a few of you started to look at it, and obviously you do as well, Rob. So it's certainly something for traders, I think, to be mindful of, and it's into that theme, Bruce, of those trades that we can look to take day in day out when the market opens, so to speak. Over to you, sir.
Yeah, I mean, I don't really have too much more to add. I think it's great, Rob, and you came across something that's working for you, and you know what you're looking for. You're using the liquidity heat map really well. and you're looking for that volume to tear up after it and jump on, and ride it. And you know that you studied your opening range. This is what you're looking for. I mean, there's going to be a lot of subtleties in your checklist. I mean, like I know you have 1, 2, 3, 4 listed here, which is great. But what I really like about your other example was you had the overnight range. There was volume above it, and you also had that liquidity way above it that you were targeting. So that was your structure. Whereas this one, I don't have that kind of feel in the bigger picture. Like, what about, overnight, previous day, etc. Start to look at maybe some of those. I mean, I know you have your point of control here, but and that's good. But that can be very whippy when it's like that. But
That is a good point. Today was a great example of that. Today, the NQ is right up below the overnight highs before the first minute ended, and then right at the 1 minute, it just shot through overnight highs. So that's a good point. I'll keep an eye on that.
Yeah, I mean, I remember you came across another trade and you took it, and it was you were kind of looking at the smaller time frame, and then I had a question. I go, what's that dotted line you put on there? And you go, I don't know, black magic or something. And
Oh yeah.
and
Perfect.
yeah, and then you were like, oh yeah, no, that was like the previous high, day's high or something like that. And it's like, well, there it is. There's your breakout trade, from a previous big swing of the previous day. So the same ideas, and this is just a smaller one of the breakout being at this little kind of area here just at 9:30. Down below it, then you see the volume building, and you're looking for it to come up into high liquidity. That's
cool.
all. That's all I got.
Definitely noted. Thank you.
Excellent. Thanks, Rob. Great. I've just got the two there. So really good, and appreciate you taking time to do the spreadsheet and everything else. And if you ever want to catch up on the news trades, ping me a message and we can chew that whenever you like.
Definitely. I'm super excited about them now. So definitely we'll send something out. Thanks everyone.
Brilliant.
Yeah, thanks,
Right.
Rob. It was we spent a lot of time on you there. It's been a while, so I thought, and these were really good examples, and you've been doing really good work. So I think it was worthy. David,
Definitely.
back to you.
Right. Just seeing if Sharega's in the room. If not, we could maybe go to Shark Baloo. Let's have a look. Do we have
Sharega, Quest?
I don't see.
No, I don't think.
Okay.
But I know sometimes we have different names, so we can perhaps go to Mr. Baloo.
Okay. Shoot, do I have it? I don't know if I have that one. Hold on.
Okay.
Sorry, guys. Thought I had it.
How is Mr. Baloo?
Just a second.
He might still
I'm
be
good.
muted.
Thank you, David. Yourself?
Yeah, very well, fella. It's all good. All good. You had a good week?
I've had a good week.
Excellent. You've been tearing it. Just the futures, or you've been on the options as well?
I've been talking options with my father. I haven't traded any myself, but we're definitely looking at them together.
I saw some of you chatting about that, so I was curious as to whether you'd start dabbling.
I did take a small position in Kinross Gold, but just commons.
Ooh. Okay. Nice. Right, I've got one trade for you on here. So thank you for some great charting. Thank you for the usual stuff, time of day and so forth. That helps me out here because I always bang on about, don't I, the open, the close, and European and so forth. It was a good trade. And so forth. You shared what worked, what didn't quite sort of worked. And I appreciate, we haven't said it yet, Bruce, it's the Monday morning quarterback commentary from us three. But over to you, sir. Talk us through, please.
Yeah, let me take a quick look at my candlestick chart and remember what was going on here.
And you've got a good
Oh,
checklist at
this
the
is
bottom as well, which is nice. Which I know that will keep everyone happy.
this is a good thing for us to talk about because we can kind of get into why people do things. This was a clean trade setup. All my entry criteria, my demand zone, my supply zone, my 1, 2, 3 reversal, and it played out to perfection. I turned this fantastic trade into a break-even trade with flawed execution.
Yeah. I think that's a good summary. I think that's a good summary of where you are, because you sort of got in, maybe again, it's QBs probably got in a little bit earlier than you would have liked to with hindsight, and you were a bit tight on your stop with hindsight. It says, Captain Hindsight here.
I think getting in early puts me in sort of a kind of an impatient state
Yeah.
because I'm waiting for the move to go my direction, and then it doesn't happen. If you look up, let me see price explores and rejects supply, VWAP, and liquidity.
Yeah.
So as per Victor Sperandio's rules, that little tiny tick above the trendline pivot high invalidates the 1, 2, 3 and kicks in his 2B rule. And had I not been kind of impatient waiting for my trade to happen, I might have been a little more together and added to my position up there, as per his rule set. But you can see where I moved my stop too soon. And that same thing, I'm riding impatience. Right there, I moved my spot down, and Bruce has talked to me about this before. More often than not, price will come back and revisit that pivot that I have right in there. Price will come back and revisit that pivot, so I should wait till after that revisit and then move my stop down. I just sat in this trade. It didn't move my direction as quickly as I wanted, and I got a little impatient, and I just pulled my stop down too soon.
Yeah, but you've learned from it, I'm sure.
Yeah, in hindsight, I should have gathered myself and re-entered.
Yeah.
As price visited that same level the second time after stopping me out, right there where I have support becomes resistance and buying exhaustion. That would have been the perfect re-entry.
Yeah, it would be. Yeah. I mean, we all move our stops around. I'm as guilty as that as the next trader and so forth. The line I try and say to myself, and you probably heard me say it before in the room, is that I try and treat my trades as if I'm down the bookies or I'm at the roulette table. Once I've placed it, try not to fiddle with it. Easier said than done, because you can, and like being at the roulette table, no more bets. That's where it is. And if you'd had no more bets on that, you'd have had a killer.
Right.
Again,
I think where I really messed up is if you go to my entry.
Yeah.
And you can see where I pulled my entry up into price. Once again, I'm being impatient.
Keith's keen to get in.
Had I left my entry at the minor sell-off low at 41.5, I would have got in at the right time.
Yeah.
But like you said, I'll learn from it. The trade itself played out to perfection.
Yeah,
it took
the vision.
a little longer to break out of that consolidation, but it was a perfect trade that I turned into a nothing
burger. Yeah, a couple of fries, because again, easy on the Monday morning here, this sort of where you got in at that 9:50 or so, the volume is quite low. Relatively, it's quite low. So yeah, after 10 o'clock would have been a better place to have got in, but you're gonna learn from it, which is fantastic. And it's great you're able to see that where the trade was going to happen and where it went to, and you've shown on the longer time chart, it disappears downwards, which is absolutely fantastic. Did you have when I looked at the chart earlier on, apologize if I read it wrong, did you have a stop in place when you entered?
I didn't have a stop in place when I entered. I plugged my stop in shortly after. But
Okay.
this is something I've been thinking about, David. I'm thinking start plugging my stop in first, then my entry.
Yeah, yeah. I mean, Bruce is going to tell me all off here. I do both of those. I know this is not necessarily about me, but like we're talking about some of those news trades earlier on, sometimes I'll be thinking about, am I going to use the system to auto trade my stops and my targets, or will I put the target in before I've actually entered the market? I am guilty of entering the market without any stops at times and doing what you've done here, particularly when I'm trading off the DOM. I'll enter and think, technical word, oh shit, my stops aren't in place. I better put some in. But it's not best practice, is it, Bruce? Really? Just in case.
Yeah. I mean, I do the same thing. Like sometimes I'll just jump in and then
Yeah,
use OCO later,
yeah. Mm,
or like a lot of times like I'll just have them really wide, and then just so I have a take profit and a stop loss, and then adjust them after.
yeah, yeah.
So yeah, I mean whatever I think is fine, whatever you're kind of comfortable with, as long as you have some management behind it.
Definitely. Other comments on it there, Shark Baloo?
I think this would have been a great trade to add and trim the position since it stayed in that consolidation for so long. I could have just pulled a contract at the bottom, added
Mm,
another two at the top,
yeah,
but I ended up, like I said, in a state of impatience. So something I'm working on is my patience. It's not my strong point, never has been, but trading is really teaching me a lot about that.
yeah. And are you happy trading lunchtime, or is that sort of the time of day that works for you well? Because this is a lunchtime trade, so you can
Yeah,
often
no,
get that range.
this is not my time to be trading. I usually try and be
Okay.
done by 90 minutes in. At my time I want to be done by 8 or 8:30.
Yeah. No, good. And a good point there by Crash to cut across, saying it can be a very good idea to get those stops and so forth in place just in case you have computer connectivity issues. A great reminder. Yeah. No. Good pilot checking us there. Thank you, Crash. Appreciate that. Respect. Okay, I think that's probably it then, Shark Blue. So yeah, really good charting. Thank you very much. Like the checklist at the bottom, lessons for us all here and so forth. And yeah, no, I love it, mate. You'll be taking some more greenery out from these just break even small burgers and fries, as Tom would say. So well done,
Thanks for
sir.
the insight, guys. I appreciate it.
Definitely. Yeah. Take care. Back to Bruce. And also Stan. My bad. I'm so rude, aren't I?
Don't worry.
David, you're so rude.
Yeah, I just want to say like you were talking about like potentially enter a gain or something or change your plan. Um, I just like think like do what stick to your plan. If that was your entry, take it, and if you break even, that's break even. You will have another day, another setups. And I think it's why it's important to set maybe times between trades or how much trade you will take, for example. I don't think it's bad to not enter after that too. You would maybe be in a other emotional, yeah, have another emotion. I mean, and maybe made more another mistake. Even if, yeah, if no, it's look like yeah, you could take the second trade than you were looking for example, after the exhaustion. Um, in this case, it would play out. Um, but would you keep the same money management as the first, due to the fact that you took a break even, for example? And I think it's why
Possibly not.
yeah, go ahead.
I was just gonna say possibly not. At that time I'm already in a slightly heightened emotional state from the impatience, from uh taking the stop and then seeing the trade start to move in my favor after the stop. So no, you're right. Definitely best to just wait for the next better setup rather than try and catch the same play.
Yeah, but except if it's already part of your plan, and I think it's what is it's really important, and it's why it's yeah, important too to set it uh, before it. Like if it was part of your plan, like for example, okay, yeah, you took the first one, you took a break even, but it allows you to enter back after. If you see something and you already vet it, that's okay. If yeah, and in this case, yeah, you did it great, even if it played. Um, yeah, that's the only comment that I have. But overall, yeah, that's great. Always the same checklist, always the same. Yeah, great consistency.
Thank
So
you,
I
Stan.
don't know if you guys noticed this, but if you look right below where I got stopped out,
Hmm.
I had some entry orders plugged in right there and I canceled them.
Yeah,
You're honing your skills. That's good.
Thanks, Stan.
yeah,
Good
pleasure.
insight. I appreciate it.
Perfect. Perfect chance. Very good. Back to you, Bruce, please. I think I've covered everyone there. I'm really forgetting about Stan.
Yeah.
It's that Belgian beer I've got. That's the trouble, see, Stan.
Stan's fault.
Yeah, yeah. Typical me. Blame someone. Blame me myself.
No, Shark. I love your 1, 2, 3 pattern, and for multiple reasons, and uh, I do this one. I have to say, like, obviously hindsight's so easy, but I find it kind of tricky because you do have this kind of structure. Uh, up here it kind of exhausts out. I mean, there's just a lot less up here. Makes sense. Your entry here makes really good sense to me. You see the volume come in. The thing, like, where and I get it. It just kept, there was just still some more buying pressure in there, and it's this back and forth in here. So the 1, 2, 3 pattern played out. Just bigger time frame here. And then it did it again here. It broke this one, or probably better to draw it like this. And then this it's looking pretty interesting after this move here, because now you broke below the swing here. You see that there is a lot of selling coming in, right? There's a lot of buying still. They come back in, but now they fail to get back up above here. And then the selling comes in, and like I think you had totally the right idea right here, and then yet again it comes back in and does it, comes back up again, and it's really choppy and back and forth there. There's maybe like and I think it would be a little bit of a roller coaster. There's one good thing in here though, is the market structure. It's making lower lows and lower highs now. And the buyers, even though there's some buying strength, and I mean, look at the bars down here; they're all over the place. Even though that there's buyers coming in, they can't lift it, right? So then I think maybe it helps, like, after this happened, like, just some deep breaths and kind of look at the structure, because it's still you're and question it, like it's still in play, right? Your setup is still in play. It's actually even on a bigger time frame now, so uh, then you can start to look at, I don't know, someplace in here maybe, or even down here potentially, maybe as an ad, or I don't know, but yeah, this is, it's just really choppy. There's a lot going on. And I can see the frustration, or I don't know, uh, a little confusion. But the market structure is pretty solid, pretty straightforward. It's making lower highs and lower lows. That's for sure. I don't know if that helps.
It absolutely helps, and it's right back to something you told me a while back, is to stand by my conviction in my trade when all my entry criteria are there. Did you notice, Bruce, I got the AView app on there?
You did where? Is this it here?
Yeah, that I this might have actually been the first day or the second day I started using it, but
Cool.
if I'm trading short and I anchor that to the pivot low of my trend line, it's a beautiful thing. So you're going to be seeing a lot more of that.
Perfect.
Cool. Well, I mean, if this is coming from strength down here, like a big strong move, it makes sense that it's really choppy here.
Yeah, it's tagged to the pivot low of my trend line.
Oh, okay. Okay. Yeah. Yeah. So, anyway, yeah, I think lots to take away from this trade.
Definitely.
Patience.
And good Trader Vic stuff there. I think I must have read about 3 books. How many did he do, or how many have you covered?
I have two of them.
2 of them. Okay. They're really good books, aren't they? They're proper text. They're not some like some of the Mickey Mouse trading books where they're like 200 pages, but there's only like 5 pages of stuff. They're real academic, I find. Or maybe it's just me.
No, I mean it's that 1, 2, 3 R and his rule set, and he has a very specific way of drawing trend lines as well. You know, those two
Yes, yeah,
things are a permanent part of what I do.
yeah. No, well worth a read. I'd say to people if you haven't read them.
All right. So,
Well, thank you for the time, guys. I appreciate it
No, pleasure.
very
Great
much.
stuff. Great catching up. Thank you.
yeah, thank you, Shark. And we'll move on to Stan. Just one more thing, guys. There's still a couple more days if you're in this blue jacket competition. So ends August 31st. So throw in your content and just maybe get something in there that could take home the winner. All right. So anyway, I just wanted to mention that. And then we'll do another one. Of course, we do it every month, but it starts, I believe, on it'll be September 10th or so. Yeah, put your hashtag BJC in there, and then it's also in the blue jacket room here, as you can see. So put in your hashtag as well. Yeah, oh yeah, prizes. So not only the regular prizes here of 3 months Global Plus and with data and runner up of 1 month of Global Plus, but also you'll get an hour with me. So that's I'm thrown into the mix. So if you value it or not, anyway, I'll be there for the winner. Let's move on and we'll get Stan up here. So yeah, here we go.
So yeah, perfect. I will start with DNT matter. So I think he's here. So
Is he here?
yeah,
He what?
yeah,
Yes,
he was.
yeah, yes. We
Oh,
got a
there.
green hand up.
Oh,
Yeah,
there he is.
yeah.
There he is. Yeah, yeah. Okay.
Perfect.
Yeah, perfect. So yeah, I will say yeah, you can directly jump. Yeah, perfect. Um, so I find great like to see what his plan was. Like it's great to have like the checklist. Now we can see he was looking for IBF failure. And all the point that he was looking for. So that's great, and we can see all of them checked. To have the context, like multiple charts with what's happening. The order flow rate, then you highlight. I really think like it's a yeah, you did a good job. You made like 2 trades in this one. We can see trades on the other images, and that one is more about the explanation. Mm,
This one, Stan.
yeah, exactly. Yeah, the second one.
Okay.
So in this one we can see how he trades through, and in the other one we can maybe see much more cleaner like the liquidity and the order flow, but what's happened. And that's great to have like multiple charts to have a better view of what's happening. I really like how you highlight the liquidity in Confluence with the with some key levels, and I think that's made like much more relevant levels. And yeah, overall the money management is good when you enter. How you scale. I'm wondering if so yeah, I have a couple of questions. Like for example, in this case, like you said, trading error. So that's a very good thing. Like you post what you think, what was an error, and a post note about your trade, and how you manage the second trade. Like it make it sorry. Uh, it seems for me like you had much more confidence in the second trade than you took than in the first one, just by the how you size your scale. And I was wondering, so in this case, if it was you, you already said that it was an error. Um, but even like when you took it, it seems that you had less confidence. I don't know if you want to say something about it.
Can you hear me?
Yeah.
Yep.
All right. Um, so the first trade was an error because I'm over here trading in the this was during Jackson Hole, and we were just getting a whole bunch of chop, and when in balance or in two-sided trade like this, trading in the middle, like that was like right in the middle of the range. It was just felt kind of out of place, but I was trying to stay with the momentum, so I was trying to short. And so my first entry was bad because that was just I missed the good entry, which was probably a little bit to the left of it. But so I got stopped out, and that is actually where I was hoping to enter, right there, like right around there.
Is
Oh,
this
and that
right
was
here? This is where you got stopped out? Yeah.
no, the left,
Oh, this
the
one.
red,
This one.
one more up. So that was my first short.
This
And
one
then the
here.
second, yes, thank you. And that one was I got stopped, and that was a bad. So that was just kind of bad. And so basically that was just like FOMO pretty much. I missed my short. So I got in on the first one, got stopped, got in a second time where it actually was a decent entry. And I got scaled, and then I got stopped again, or I got scratched right there at the VWAP.
Up here.
Yeah,
Okay.
and then the VWAP to VPOC setup plays out. But yeah, okay. So your question was I had a little more confidence in that second trade, Stan, because it was a better entry, a better entry.
Yeah, true, but I think like you had your confluence, and it just looks like at this time,
Oh, you're talking
y-
about the long, right?
yeah, exactly.
Oh, okay,
It seems
yes,
like
that one was a
you,
lot better.
yeah, exactly. Like it for me, it make just yeah, it's completely two different things. Like how confident you were in the first one, and how you were for the long one. Uh,
Yeah,
and I think just stick with your plan and try to repeat exactly what you did, for example, in this case. And yeah, take really what you are looking for. and
hmm
and yeah, that's true. Obviously we'll always have FOMO and everything. That's part of trade journey. um, but it seems like yeah, you exactly know what you're looking for, and you know when you might have a very high chance, and that's where you might really get sort of yes sort of things. um,
yeah, I know it's when I start stepping out. So I've been trying to focus on a top down approach and trying to participate in that. And yeah, it's when I step out of it, it doesn't really go too well. And I think this was London close as well. Is that right?
Getting towards it, yeah,
Yeah,
yeah.
right before, right next to, right
11th,
before it.
yeah, yeah. Good point.
But yeah, and so that's very great. Like if you come back in the other chart, the first one.
Oh yeah, the first image that Bruce had up. Yeah.
Yeah, exactly. I found really great, like how yeah, we can see the strong move into high liquidity structure. Then we break above, and then yeah, your IBF plus the confluence of those liquidity, the potential trap sellers.
I'm
No,
sorry, this one, Stan? This one?
yeah,
Yeah.
Okay,
exactly.
okay.
Yeah,
All right.
yeah. So we can clearly see like the strong move into this strong liquidity on the right.
I'm sorry.
Yeah, yeah. I mean the sellers. Yeah, yeah.
So
Where
over here is what you're talking about,
Yeah,
or
exactly. Yeah,
okay,
there
okay,
it's where he took the long.
okay.
And so on the left, there were like a strong move, strong sellers into high liquidity. And so you notice like the high liquidity, yeah, below exactly. Then we get back above, and so that was your, I think, your IB plus all of other confluences.
Yeah, the IB failure.
Yeah,
Yeah, it's possible that sucker could have stop picked that, especially on the second time testing it. But it fell in line with the context, which was balance, or to me it was. Even though it was a strong move down, I still felt it was balanced. And like you said, those trapped sellers pops back above that pops back above that IB, the initial balance low, and that was after testing a major level below. So yeah, it was clean. It was pretty lucky. The entry was sharp though.
yeah,
As both of those entries actually, if you took the first one or the second one, it looks really sharp.
yeah. But still, that's a good one. Obviously, I would say for the entry, maybe try to enter with some bias conviction, with dots or relative volume. Even if you nail it, it might. But you might maybe meet some more chance on your side if you're entering with the conviction that you're looking for at the point that you're looking for. Uh, but yeah, just that's a really good one. So
Yeah,
yeah,
so I think it's zoom out real quick. Okay, now go to the second chart. Okay, so it's not on here, but this was a reduced risk entry where I don't scale in. I just basically took a reduced risk entry because it wasn't really at like a great location. It was a sharp move. It didn't really have triggering structure like what you're mentioning. So I just took one entry into it with the three lot MES.
Yep.
And so yeah, reduced entry, and I'm like I have a checklist on another one of my images. We might find if we I have a higher risk entry
yeah,
where if I actually get triggering structure, and I'll probably lay into a couple more entries on something like that.
yeah. That will be in the next trade that I took for you.
Oh, okay.
I saw you set one, and so I was wondering maybe why here too you haven't. Um, but still, yeah, that's great. Then you have those, and then we know, yeah, when you should lower your risk, or that's very great to have those.
Yeah, something. Yeah, it's definitely something I've been playing with. I haven't really done it before, but yeah, increasing my risk in certain situations when I have a checklist for that, and then reducing my risk in other situations. So
Yeah, that's perfect. So yeah, great. I don't have more thing to say. I don't know if David, you want to jump over?
Yeah, no, thanks, Stan. Not a great deal, really. I think this is within Tom's realm setup, isn't it, in terms of these sort of IBF and so forth. So yeah, no, it's when I look at that pattern, as you say, it scoots down to absorption, and then we're starting to get those sort of higher lows and so forth. You've got the time of day, which I'm going to answer on the chat in terms of London close, and the price is going to scoot back up. So it's, I'll say no more simpler than that, but Bruce would tell me off for being a bit sort of simplistic, David. Yeah. To you, Bruce.
good point.
Well, yeah, I was just going to tell David off. No. I mean, uh, I find it a little confusing. Personally, like, okay, like trying to get some clarity around it here with the volume, the price structure, and the liquidity. So this one's really nice. Look at this big move to the upside, right? Now this is your pullback here. Now here's your next move up here, and then kind of looking around in here, like, is there still buying?
This is multiple days.
That's fine. This is good.
Okay.
So you want to go with the the trend direction or the momentum on that. Now
Okay.
this chart here, what time frame is this one?
This is intraday on a Renko chart.
Okay.
So this is maybe like 4 or 6.
So this
4 or
here,
8.
this here structure relates to this structure here, right?
Correct. Yeah.
Okay. Yeah. I mean, like, it's still going up. There's still, okay, it did dip below this here, but market timing, maybe there's something in there, and then it definitely went above it. But it's pretty choppy, and it's kind of hard to read. The anchored VWAP this here. I mean, I would be careful on that. I would instead, if you think that the buyers are coming back in, make the anchored VWAP down here, and then look for that first pull back to it here. If you see enough buyers, and this is the strong move, right? That's what you're looking for, and I guess it relates to this move right here. Yeah, it does. So that's where maybe to draw that anchored VWAP. But like anyway, it's chop, and like look at even the profile here. You've got your double distribution. It pops to one, pops to the other, and I'm having a hard time just trying to get clarity around the bigger structure. But I do like what Stan had said about this really big liquidity grab, and it's heavy selling, but now we're kind of waiting and watching till the buyers come back in. So there's I know you got your checklist. That's great. This is your guide then. If you know what you're looking for, then stick with that checklist. It's not my setup, it's not my trade, but I find it hard to kind of read the bigger picture here, if it makes any sense.
On the blue, yeah, I mean, it is definitely chop, right? It's balance. And so that's kind of like, and getting into Jackson Hole on this day, I believe. And if you look at the blue on the left, there's a little anchored VWAP on the
Here,
left
right
there.
here? Yeah,
Yes.
this one?
No, the chart. I'm sorry.
Okay.
The chart that's
This one
right
here.
there. Yeah.
Okay.
So this is a higher time frame. And that was that massive move down that we had where it tests the bottom and then it comes back up. So we have the strong momentum right back up. And then we get to a space here where we're kind of stalling out. So we have the strong momentum up where it was, I would say, an uptrend at that time. And in this past couple of days, we see it starting to taper off, starting to balance off a little bit. And when we see stuff, we see the move down a little bit, yes, the day before. And then overnight we go back up pull, and then we go into RTH, and this was the pullback, test this level again, and then goes back up, and that's the buyers that we see now.
Okay, so what time frame is this? This one? I can't quite read it. It's just a little too small. So anyway, just one of the things on the anchored VWAP, it broke it, right? So this is no longer valid. You got, it looks like you have another one down here though, and it went right to it and bounced. And then yeah, I don't know what time frame this is, but maybe you know, if you believe in these guys in here, and that they are driving the market, then the anchored VWAP would be off the low there. Are you there? Oh, he's muted. Okay. Anyway, that's all I got.
Oh, sorry about that. Can you hear me now?
Yes.
Yep.
Okay, yeah, that
Thanks,
blue
Bruce.
one is higher time frame, so it's zoomed out quite a bit. Over the span of like 3 years or something like that.
Oh, wow.
Yeah,
Okay.
the blue one.
Okay.
Well,
And yeah, so the anchored VWAP from the top to the left, you said it broke it, so it's no longer valid. Well, I mean, if you think about it, those momentum sellers selling at the top, and we broke it, then those sellers, we have an I mean, in my head, I see like I can see that those momentum sellers are probably in trouble because we broke it to the upside. So now this downtrend that we had is not really valid much anymore. So it's possible we might go into balance, or we can just have a little bit more buyers coming in. So like that trend, the anchored VWAP from the left that was going down, I see it as kind of momentum sellers in trouble, basically. It's how I see it.
okay. I mean, yeah. I mean, you can see a trend line in here too, and the power through it. It's up to you. Like, just however you want to use your anchored VWAP. What I understand, or what I'm looking for, is where is a larger player positioning themselves, and they've moved the market, and we know that, and then where are they going to add to their position? And you know, it nailed it all the way down here, and then it broke through it. So yeah. Anyway, that's my kind of anchored VWAP. That's as much as I know about it. Okay, so let's see. Any other comments? Stan, David, DNT?
So yeah, but we can go to the next slide.
Okay.
Perfect.
So I took another one for DNT. So that's a second trade that he took.
This one here.
Yeah, exactly. That's
Okay.
another side. And in this case, so we can see like his checklist about how he would reduce his risk. Yeah, and how he would, yeah, scale about the condition, about the market. And so I was just wondering if you could go a bit over there. So in this case, you might maybe not have a checklist for the power hour. It seems. Yeah. Sorry. Yeah, on the left. So yeah, just I was wondering if you could go through a bit about your risk management or.
It looks like this is your entry. Is that right?
Yeah, exactly. But I mean, if he would take maybe, I don't know how many contracts you would take, like how you define your risk with your checklist and you set.
Well, I'm putting, so that was a bad entry. So there was a long that you have circled right there, Bruce. That's a long entry. And I missed my entry. Man, trading with the baby on your trading with the baby is no joke.
I
It's a
bet.
balancing act. So that absorption zone that we see there on the left,
Oh, on the left.
where you had the long circled.
Ah, okay, yeah, here. Oh,
Okay, so
yeah,
that
yeah.
is
This here, this is great. I love seeing that. That's fantastic.
yeah, this absorption zone. They've been helpful and they've not been helpful. So but they are helpful when it aligns with either liquidity or like a stock zone, and we can actually see price testing it once on the top of it, and it comes back down, and it actually stop picks it
Ah,
right there. Yep.
this
Yeah,
one here.
No, the one that you had
Oh, this
highlighted
one.
here.
Okay, and it
Yeah.
goes just below it here and then back up.
Right.
Okay.
So the entry would have been nice to get the entry, but anyway, it actually was because like if we wanted to see some confirmation, it supported that zone and goes up. So I guess it's not that bad of an entry, but my stop is actually kind of wide at that point because I have to put the stop right below that zone where that swing is on that long. So that was a reduced risk entry. Um, the R factor was pretty good. So from here, I was hoping to see the top back up to the top of the range, and stops were picked. So that was pretty good. The only thing that we didn't really get here was like trigger structure. So I took a reduced long right here. And for power hour, so I'm looking the first half of the hour. I look for liquidation of the dominant side. The first, and so like this, we had a strong move down, and the market reverses. So uh, this dominant side, I'm still assuming is the sellers, even though we had this strong move down. So it's a little bit hazy to know which side is actually dominant here, but I'm still thinking it's possibly the sellers. And this was yesterday, so um, I'm anticipating that they're still liquidating at the first half hour. And so this long entry was to participate in the short liquidation. And then the second half of the power hour, I'm looking for the continuation of the trend. And so that's what that short is that you circled on the top right.
This one here.
And that, correct, yeah. And that was also another reduced risk entry as well. And stops actually were picked right there. And that, if you look, that all that liquidity got picked up, boom, and then that was the short. And I mean that was a pretty risky short, but it was only one entry on 3 MES contracts. So
Okay.
so that's kind of how I managed. I mean the risk there. And power hour, and that was right at the mock. So the mock at the 10 minutes before the close pops all that liquidity and then possible continuation with the trend at that point.
yeah, perfect. That's great. Yeah, like how you enter in confluence with liquidity. You know what you're looking for. I think just keep practicing, keep doing the same, keep your checklist.
Yeah, the power hours, it's pretty interesting. I've been looking at it. So I'm trying to only trade since I'm taking care of the baby now. I'm over here trying to maybe trade the first 2 hours and maybe the final hour as well.
Nice.
So
Nice.
depending on how it goes, depending on how it looks, and this one looks pretty good. So it went okay.
Yeah. So yeah, for me that's okay. I don't know, David. I think you might have.
Yeah, no, thanks. Well, usual thing, great charting, lovely use of the checklist. To a casual observer, there's a lot going on here, and to many people, it does look fairly complex. onto what is quite a sort of a simple approach to getting money out of the market. So, but you're unpacking it really well, and I do like the focus on those times in the day. A common theme we've had today and we've had on previous sort of weeks. And if we all look at the chart for today, in terms of that power hour, that into the close, it was aggressively sold into 4 o'clock, but then very, very quickly you had 4,000 volume plus taking the price sort of back up. So if you're willing to be at the screen and roll the dice, then you get a lot of really good signals to trade from. So yeah, well done, well played.
Yeah, it is an interesting one for sure. The power hour, the final hour.
Yeah, it is. I know we touched on it on sort of the previous weeks. It's a bit like the news trade, Bruce, in terms of sure you've got to know what you're getting involved with, who you're fighting with, and what can go on. But at the same time, again, everyone can correct me. I'm going to say like 95% of the days in that power hour, you're going to get a nice bit of movement. And if you can read the movement as you're doing with your checklist, you can be on the right side of that movement. And if you're on the right side, of course, you can make some money, which we're here for, rather than sitting around during lunchtime in a tight bound range. But then I'll also carry that in respect that not everyone can be at the screen at certain times of the day, David. So I know that it's not. But good shotting. Well done.
So that
Right,
I think it's important to mention that that reduced risk on the final hour, because anything can happen. It's very quick. You can lose basically everything that you made. So
yes,
yeah,
you can. And you take yesterday. It was a very toppier sort of close. Not that it matters. I'd come back from lunch and my system was just a tiny bit laggy. We scooted up and then we started to dive down. And yeah, I've used the phrase a few times today, but you can get your teeth knocked out badly if you're on the wrong side. That's for sure. Really good. But it's nice to see Sharp Blues put in there about the time of day. Yeah, I'm a sort of time trader. That's probably coming across sort of quite clear. But it's that theme, isn't it? It's about these hours. It's about the news. It's about the open. It's about the close, the European close, all these other things during the day that give an opportunity to read the market and make some money, which we're all here to
do. So there's that anchored VWAP again on the intermediate time frame where it's testing that lower anchored VWAP, and it rejects it. And that anchored VWAP also aligned with the previous naked volume point of control as well. And there was a pretty strong reversal right there, actually, that from the low of the day. That's what brought the market back up.
Yeah.
Back into balance. Yeah.
I don't chart any of the sort of longer time things on the lookup, but it's always surprising when you do see them like you're showing here, the absolute significance of them. It's quite scary when you, like, I think, was it Bruce, you're saying along, we sort of like on Forex and you zoom out and you're talking about some fundamentals and you draw those lines across either, or you see them in your mind across and you think, damn, that's something that happened back in February and it's meaningful today, six or so months on. It's always intriguing, that's for sure. So yeah, a good lens to put across it. Oh
yeah, it's definitely helpful in the higher time frame to see these anchor VWAPs.
Definitely.
In alignment with spot gamma and volume profile, which would be like micro composites.
Yeah.
And it's a lot, but I mean, if you participate on the higher time frame, it gives you a better picture of actually what's going on and where you should be playing, maybe, I guess, and where you shouldn't be.
Well, yeah, I mean, it's a segue, Bruce. You take I talked about how the price scooted down at the end of the day today, as we've just said. That's the volatility trigger. We came down, not quite to the dime down to the VT, but we came down through L1, went down to VT, and then we went down to the international dateline and options, and the price nose planted, stopped, brick wall, and then 180'd back up. So if you have that on your chart, it gives you a heads up that actually, if you're in a short, it might be time to bag up. And for the brave, get into a long.
Yeah, it's beautiful. I agree.
Yeah.
When they're all in alignment like that, it's pretty wild.
Yeah, that confluence, like we're talking about the ORB, where you get those 3, 4, 5, whatever things together, it really does, make you feel big and bold. Iron Man on the trades, Bruce.
I was pretty upset I missed that long though, that short squeeze back up, and so but that was my opportunity. Was waiting,
Yeah.
waiting, and then it did actually pull back and showed respects to that absorption zone. So then I got long. I'm like, all right, continue this liquidation a little bit higher, and let's see what happens into the mock, and that's what happened.
Perfect. Yeah, no, important time of the day.
Hmm.
Yeah, I think maybe just a few comments that just looking at the chart here. I think there's a lot like what David said about time of day, because your analysis and your documentation and your criteria is excellent. It's a maybe it can be reduced some though, and maybe time of day is a good filter. Uh, when you look for this criteria within a certain time, that that resonates with you. If it's the power hour, then this might be a real kind of like maybe a missing piece that could really help you. So for example, I really like this trade a lot. I see this strong move. There's strong volume. Look at the volume here. It is strong. And then it's a look at the pullback. You can draw your divergence there. I mean, there's CVD is gonna be like really high, and this resonates with you. You've showed this now many times on these little areas, and the pullback here is a gift to this little area. It's like less than 50%, but it's somewhere around in there. Next to the 50% line of from here to here. It's somewhere in the middle there, and then you get your pullback. You said you get your stop, kind of spike below. I think this entry is excellent. This is exactly what I try to do. You see the trend line breaking, and you're looking for, this is the sell volume coming in. Let me try to zoom in a little bit more. The sell volume coming in, but now you're looking for the buy volume to come in back up above. And it's a beautiful entry. And you're going with the trend. I would say that with some of these, like you can probably hold for longer, and maybe try and do it in replay mode. Take this file in replay mode and go back and replay it again and again and again. I think you did on this one anyway, but like do it again and like look for your other structures that you had marked up, like this structure up here or even this one here, and maybe that's where you start to look for taking some profit. But you're going with the momentum, and you got a really good one here. And it's with a time of day, and it's simple. It's simpler than all this kind of back and forth and these lines on a chart, and it does this and it does that, and instead, like you've got this volume here and movement telling you, giving you some feedback here with the time of day.
Yeah, cool. Yeah, the stop management on this one would have been the entry. Like it does look good. The only thing is the stop. The stop would be kind of wide there because it would end up going underneath the absorption zone. But I mean, it's not the worst entry, that's for sure.
But
And
you do have, like, here's this little, look at that volume coming in right after the divergence. So here's your divergence.
True.
And so it's, I mean, there's something there. So it's kind of hard to see, and there's no liquidity, or you said there was some absorption, etc. here. but it's hard to see the heat map. But yeah, this is really nice trade, really nice setup.
Yeah, I carried this. I moved the stop up. I was trying to see if it was going to keep going. It couldn't. It couldn't keep. It couldn't keep going, and it broke low. So I moved my take profit down right before the mock. But yeah, I was trying to ride that sucker as much as I could because I wanted the real move, which was to the left, but I got this partial move, but I was happy to get it. So
Yeah,
Perfect.
yeah, nice stuff. Let's see. I think that's it. We got AJ. AJ's not in today, so I think we can maybe look at AJ next time. And then for the rest of you guys in here, Crash, we went over you last time. Thanks for sticking with it. We'll go over you next time as well, Steven. And then I've got a bunch. Vinny, I didn't cover any of mine. Who I have? I have Vinny, I have Dune Runner, and JMK, and then yeah, that was it. Yeah, we'll have you guys lined up for next time, and that's that.
Great stuff. No, really good catching up, everyone. Thank you.
Yeah, and oh yeah, the Mobies. Yikes! God, we have so many. Now Moby did a really good job on some coaching as well. So I might as well try to bring this one over. And I forgot about Mobies. Joseph, he's got you, David, in here. He's got Slow Down as well. Slow Down, he's got a couple in here. Slow Down has been really creating some beautiful stuff as usual, as per usual. But now he's got higher time frame. He's really kind of settling into what works for him, and some beautiful things.
Definitely.
Yeah. Anyway, guys, I think we'll wrap it up. We'll call it a day here. But I don't know.
Would you share that?
What's that?
Would you share Mobies?
Yeah, sure.
We can see it?
We'll share all of them. We'll put them in the into the Bookmap Academy room. They're all public, or published. So you can take a look. Yeah. Any parting words, Stan, David, DNT?
Yeah, all good. Thanks for posting. Keep doing. Great job, great session. Thank you.
No, really good, Bruce. Good session today, as always. Nice covering some new areas like the news and so forth. Common theme of time of day, opportunities that gives us, as well as dangers and so forth. And have a great weekend ahead, everyone. And thank you. And look forward to catching up next week.
Excellent. Thank you all.
Cheers, guys. Take care.
Thanks,
See you
guys.
soon. Bye-bye. Bye-bye. Bye.